Bitcoin tests critical support as ETF outflows surge. Is the crypto bottom finally near? Is Bitcoin nearing the end of its correction, or is one final capitulation still ahead? Institutional investors just pulled nearly $700 million from Bitcoin ETFs. Fear across the crypto market continues to rise, yet multiple on-chain indicators are beginning to flash signals that have historically appeared near major market bottoms. Here's what every crypto investor needs to know today. Welcome to Fredtong Capital. This is your daily market briefing, where we break down the biggest developments across Bitcoin, cryptocurrencies, macroeconomics, and institutional finance. Today we'll cover the latest ETF flows, regulatory developments in Washington, growing institutional adoption, and why Bitcoin is approaching one of the most important technical zones of this market cycle. Let's dive in. Daily market briefing. Today's market remained under heavy pressure as investors continued reducing risk across digital assets. Spot Bitcoin ETFs recorded another significant day of net outflows, with nearly $696 million leaving Bitcoin funds. Ethereum ETFs also saw approximately $82 million in net outflows, while Solana and Hyperliquid products experienced smaller withdrawals. Despite the short-term selling pressure, institutional expansion into crypto continues to accelerate. Japanese financial giant SBI Holdings announced the acquisition of cryptocurrency exchange Bitbank, further strengthening its digital asset ecosystem. At the same time, global asset manager Invesco introduced a tokenized treasury fund designed to support stablecoin reserves under the proposed U.S. regulatory framework. Meanwhile, lawmakers in Washington are increasing efforts to advance the Clarity Act, with both Republican lawmakers and industry participants pushing for a comprehensive regulatory framework before Congress begins its August recess. These developments send an important message. While investors remain cautious in the short term, governments, asset managers, banks, and financial institutions continue investing heavily in blockchain infrastructure and digital assets. Market sentiment may fluctuate, but long-term adoption continues moving forward. Bitcoin market analysis. Now let's turn to Bitcoin. Bitcoin briefly dropped below $59,000, triggering another wave of liquidations across the market before stabilizing around the current trading range. From a technical perspective, Bitcoin remains inside a broader corrective phase. However, several long-term indicators are beginning to resemble conditions seen near previous bear market bottoms. Weekly momentum continues forming a potential bullish divergence, while Bitcoin's relative strength index has entered oversold territory across multiple timeframes. Although these signals are not yet confirmed, they suggest downside momentum may gradually be weakening. On-chain data also provides an interesting perspective. More than half of all Bitcoin currently in circulation is being held at an unrealized loss. Historically, this condition has appeared near major accumulation zones during previous market cycles. Several proprietary on-chain models are also flashing signals that have aligned with previous cycle bottoms, although final confirmation has yet to arrive. At the same time, market participants remain focused on concerns surrounding Strategy and Michael Saylor. Recent legal investigations have fueled speculation that the company could eventually be forced to reduce its Bitcoin holdings. However, based on currently available information, there is no evidence suggesting an immediate liquidation of Strategy's Bitcoin treasury. Instead, the situation appears to be creating additional fear during an already fragile market environment. Key levels to watch. The first major support zone remains between $57,000 and $58,000. If buyers continue defending this area, Bitcoin could attempt a short-term recovery back above $60,000, potentially leading to a relief rally over the coming sessions. However, if Bitcoin loses this support decisively, traders may begin watching the next major demand zone between $53,000 and $55,000, where stronger historical buying interest could emerge. On the upside, Reclaiming $61,000 would represent the first step toward improving short-term market structure. Market sentiment. Market sentiment remains deeply pessimistic. Heavy ETF outflows, widespread fear surrounding leveraged positions, and ongoing concerns about institutional exposure continue weighing on investor confidence. Ironically, periods of maximum pessimism have often coincided with long-term accumulation opportunities throughout Bitcoin's history. While that does not guarantee an immediate reversal, it reinforces the importance of focusing on data rather than emotions during periods of elevated volatility. Market outlook. Looking ahead, Bitcoin appears to be approaching a critical decision point. If support between $57,000 and $58,000 continues to hold, the market could experience a short-term relief rally as oversold conditions begin attracting buyers. On the other hand, a confirmed breakdown below support could trigger another wave of selling toward the mid-$50,000 region before a stronger base begins to form. Despite ongoing volatility, institutional adoption, regulatory progress, tokenization initiatives, and stablecoin development all continue moving forward. For long-term investors, those structural trends remain constructive, even as short-term price action stays challenging. That's today's daily market briefing from Fredtong Capital. If you enjoyed this analysis, be sure to subscribe and turn on notifications so you never miss our daily coverage of Bitcoin, crypto markets, macroeconomics, and institutional finance. Thanks for watching, and we'll see you in the next market update.